Hey, hi folks. Good afternoon, wherever you're listening from. My name is Kalu Ajer, and welcome to Twitter space that we are hosting today with the PenOp, the Pension Fund Administrators Association of Nigeria. This afternoon, we want to talk with some chief investment officers, right? Of PFAs, and essentially want to understand what's going on in that sector. What are the new investments, products and services? What is the overall feel of our temperature in the pension sector in Nigeria? Very, very important sector. One of the great successes in Nigeria has been this pension reform, where we've gone from a 2.5 billion, or is it 2.5 trillion deficit. Back then, it was about 25% of our GDP. We've gone from that deficit to today. We have a pension industry that has nearly 10 million participants that are contributing. It's fully funded, secured by biometrics, and the largest the repository of long-term capital in Nigeria. So I have a few co-hosts. I have the guys from PenOp. If you folks want to unmute, just introduce yourselves, and then of course we can get going. That would be appreciated.
Hi, Kalu, and hi, everyone. It's a pleasure to be here. Often, and I think you've mentioned it, that this industry has grown from a deficit of 2.5 trillion in 2004 to about 15 trillion. And that's just in the space of less than 2 decades.
Correct.
But what is often not mentioned is how did we get there? We entrust these people to keep our money, and we just expect it to magically grow. There's a lot of background there's a lot of backwork that goes on in the background into investment. The decisions they make. These guys manage trillions of assets. They're not day traders, as it were. They're not retail traders. They're not amateurs. These are professionals. And I think not enough is discussed about the decisions they make, why they make those decisions, what propels them towards those decisions, and the good things that their decisions do for the economy, for the country, for people. And I think not enough light is shed on that. And I think that's what we are trying to do today. Just hear from them, ask them questions. And fortunately, we have two of the cream of the crop here in Bola Ibrahim, the head of investment for Hope Pensions, and Damola Odunaike, the head of investment for Northern Berger Pensions. Combined, they have well over 200 billion naira in assets. These are the big boys we're talking about. The big women we're talking about, big men and big women. And I know for sure they will do justice to our discussions today. So, this is meant to be fun. It's meant to be engaging. We will ask them questions. The people, your listeners, will have the opportunity to ask them questions as well. And, just engage the public, just so everyone knows, yes, these are the professionals. This is what they do. This is how complex the decisions they have to make. And, let's just enjoy and share their knowledge.
Okay, excellent. Good intro there. I've got Dami on I see him here. I've requested for him to speak. So Dami, once you get it, just request to speak and I can add you on. I can I was looking at the results, or should I say the quarterly reports by PenOp yesterday, right? Looking at the asset classes, like I said, 10 million Nigerians nearly enrolled in, and such a lot of money sitting there. So the first question that comes to mind whenever we talk pensions, right, is just to clarify that these are funds that are fully invested. There's no cash lying somewhere in some drawer, right? The whole idea is these are contributions made by Nigerians and their employers, and it has been deployed, of course, in the economy to grow assets for you so that when you retire, you are able to have these funds available. So whilst I'm waiting for Dami, let me just go ahead and ask you real quick, right? In terms of returns, if you go to my handle, I shared the quarterly reports for the PFAs and where their money is. The bulk of the funds that I see are in federal government bonds. This is across all the funds, also the closed pension fund, also the approved existing schemes, even the retiree schemes. The bulk of those funds are in government bonds. Government bonds right now are doing anywhere from, say, let's just be 12% all the way to maybe 18%. But inflation has risen in Nigeria by almost 22% in Nigeria. And it's been core inflation, it's no endemic inflation. Should I be worried if I'm a pension fund contributor that my returns when I retire are going to be available for me and will have beaten inflation? PenOp, is that going to be a worry that I have? And if that's going to be a worry, what are the pension fund administrators doing about this? I think I've got Dami now. Dami, hi. I think you can speak.
Okay, can you hear me?
I can hear you very well. Thank you. Welcome.
Okay, welcome, listeners listening to should I call this podcast? The host to Kaluaja and Akiola to nice work here.
Great.
Just to introduce myself, my name is Damilola Odunaike. I lead the Treasury and Investment team of Norimberger Pensions. Norimberger bought over IEI and Core Pensions mid last year. Okay. So, do you need me to speak to anything yet? I don't think
yes.
so.
Did you? I had asked a question, right? If you look at the composition of the assets being managed by the pension fund administrators, even the closed schemes, even the pension and the approved schemes, it's tilted 63% to bonds, so overweight long-term federal government bonds. My question I asked initially was that those bonds are paying anywhere from 12% all the way to say 18%. But we know inflation in Nigeria has been endemic at double digits, about 20%. And this is like, it's core, it's sitting there at 20%, right? So as a contributor to the pension fund, the RSAs, right? Should I be worried about inflation? And if I am, what are you guys doing about that worry?
I think where we have inflation right now, it's at an all-time high, and that is the same for most other regions or countries, right? So nobody is even trying to chase inflation, looking for real returns. Of course, we know real returns is your normal or nominal return minus inflation. So people are no longer chasing real return. That's looking for returns above inflation, as it is all over the world. So I think what the focus should be is what makes sense, absolutely, in terms of return. Looking at historicals and all of that. I think where we are right now, 15 to 16% on FGN bonds. That's not bad considering that our liabilities too are also long term. So we can chase those higher yields on the long end of the bond yield curve. If you want to do anything short, you'll be looking at way lower yield on T-bills until recently was in the single digit region.
Yeah.
So of course, for us that have long-term liabilities, most of our contributors seated in fund two won't need that money back in the next. They won't need that money in the next 10 to 15 years. So yes, we can do long-term investments at the far end of that curve at 15, 16 as we have it these days. And I think that's pretty good return. And if you want to chase anything higher, you'll be looking to do private equity, venture capital, all those kind of investing. Yeah, it makes sense, but those things come with a whole set of risks. I don't know if I think we should all understand that. There's plenty of due diligence that needs to be done there. There's plenty of business risk that will be taken with the contributors' money. And that's why you find that so much of contributors' funds have been put in FGN bonds, really.
So it's more of a number one goal is safety of those contributors, safety
yes.
before, yeah.
Safety first.
Okay, you mentioned that your liabilities. I presume you mean the contributions of the contributors, right? The pension contributors are long term.
Yeah.
Could you speak to that?
Exactly.
You also said the funds. I know we have about 4 funds. Could you speak to those funds and the composition? What makes these contributors long term? Just so that we understand that angle you're bringing. If the contributors are long term, speak to that and link it to bonds, if you may. Yeah.
Okay. Is Bola from Oak on the call?
I'm trying to add him. If he is, he could just request to speak, and I'll just add him. Yeah.
Okay. Okay. Let me take this then. I think there are 6 funds. So 2 funds have been added in the last few years. Fund 1, there's Fund 2. Fund 1 is sort of the riskiest fund because it allows PFAs invest in more variable income instruments. Then Fund 2 is what I usually refer to as default pot. So the moment you are signing on a contributor or an employee, opening an RSA, the funds start going to Fund 2. So if the contributor decides to take more risk and then chase, as well as chasing higher return, contributor can decide to move to Fund 1, hoping to make some quick money from, say, more equity investments and all of that. Fund 3 is where you have funds for contributors from age 50 that are still in active service. Then Fund 4 is just for retirees that are already retired from active service. Of course, after age 50, they're there in that part. Fund 5 is fund established for micro pensions. Micro pensions fund is supposed to cater to the informal sector, artisans, self-employed people that are not on the monthly salary schemes. And then Fund 6 is the ethical fund or Islamic fund, where all the funds there are deployed towards Sharia compliant investments, halal investments, ethical investments. Of course, we know what that means.
Okay.
So pretty much that's how the funds are structured.
So who chooses these funds? I choose the funds I choose where to put my money?
Yeah, exactly. If you haven't written a letter to your PFA to shift between funds, your money and your monthly contribution from your employers go straight into Fund 2. Okay. So if you then want to take some more risk with your money, of course, based on your trust for your PFA investment team, or based on a historical performance on their Fund 1, you can shift to Fund 1 because they're able to do a lot more equities, a lot more variable income investments vis-a-vis fixed income investments.
Okay.
So with variable income investment, you can make a whole lot of money, but then there's a risk of losing some of your principal too. That's how variable income investments are like.
Yeah.
Okay, fixed income is just very modest return. It's fixed. There's no variability to it. From the get-go, you know what your interest rate is or your income and exactly what maturity date there is.
And it's very
different between those two things.
And before I hand over back to Akimbola, it's very interesting that the largest proportion of funds in Nigeria are in Fund 2. Almost 60%. Yeah, 60% of Nigerians choose Fund 2. Very few choose Fund 1, which you say is the equity and the high risk fund that can get you more volatility, but it exposes you to more potential returns. Very, very few, not even up to 1%. It's on there. Very, very interesting narrative there that Nigerians prefer the safety of the balanced funds than to the equity side of the portfolio. Akimola, did you have a follow-up, sir?
Yes. I was thinking, another fact that could contribute towards that that phenomenon is that the fact that contributors have to request to move to the fund one. So what might happen is some, because fund two is the default fund, you have some contributors who might not be bothered enough to request for the fund one, or don't know that there's a fund one, as it were. But speaking of continuing on returns, I was just looking at the data. Before pre-COVID, over the long term, the assets had performed relatively well, even compared with inflation over the long term. But it seems that there has been a significant change since COVID. So, Dami, I just want to have a better idea. Has there been what has been the main driver in your opinion? Because looking at some of the funds pre-COVID were performing, some above 20%, some above 30% year on year. But since COVID, it seems that those returns have dropped a little. Are there any reasons behind that, in your opinion?
So the thing is, what I observed from, of course, I just joined the industry late last year, August to be precise. Okay, I wasn't in the the PFA industry. I'd done commercial banking, of course, in the treasury, and then investment banking before then joining. Okay, so what I observed from looking at portfolio I met, and my interaction with the other CIOs is that there are a few factors for why returns now are not lower than pre-COVID. Of course, COVID brought down fixed income yields to all-time low levels. And the whole hard money is maturing. The hard money is falling into their laps. Those monies have to be invested anyway. For instance, COVID brought yield on the 30-year bond to 8% levels, 8-9%. Okay, on the 30-year bond, it brought treasury bills yield on the 1-year paper to 2-3%. Okay, and the contributions come in monthly. They don't stop. Earlier investments they had made on which coupons are paid, those were also coming during that period. So all of those monies in 2020 they were forced to invest them at single-digit levels, very low levels.
That's a very interesting take. So the COVID dropped rates, exactly. And then the PFAs had to then invest in those low-yielding fixed income investment that pulled down the results. Interesting.
Exactly.
So, but right now, rates more or less, the short-term rates went up, came back down again. They've been going yo-yo since the short-term end of the market, but the bond market has sort of stabilized back. So we're back in calm waters.
Yeah, so to say. So what's going on right now is all the PFAs, all the CIOs are just averaging up by buying up all of these high yields are available right now, just so it averages out, all of those 2020 purchases. So over time, we'll get back to very high returns on contributors' funds.
Okay.
So it has to be said that 2020 was such a bad year for any investor in the country.
All right. I got a follow-up question, okay, but I don't know if you could allow me to ask this, right? So I speak to some people, right, especially younger people, and I always be like, you have to invest even in your RSA before you even do your normal investment. And I tell them why, because your retirement savings account is tax deferred. So any funds you put into your RSA, you don't pay tax on that. You defer those taxes, number one. Number two, it's compounding. So if you open up an RSA, it's automatically compounding because the managers are taking your dividends, putting it back in the fund, and your unit value is going up. But they're a bit still, they quiver. So could you speak directly to this? I'm trying to add Bolande as well. I've just sent you an invite. Could you also speak to, if I'm a 25-year-old guy, I have a gig economy, why should I have this RSA? What's the difference with me having this RSA as opposed to say open up all those savings accounts are out there that you can save money on an app? What is the main difference, and why should I really go do the RSA route? Maybe you might have another point, right? Why should I do the RSA route? Why can't I just do the normal saving through my apps, either through a bank or buying shares? What makes the RSA so special?
Before I came into the industry, I could have taken same side with an average youth out there and just have doubts about what PFAs do with our monies. But when I got into the industry, and I felt firsthand how much of supervision and regulation it is the PFAs under. I realized that honestly, monies in the RSAs are safe and they are being efficiently deployed because all of our investment activities are being reported on daily basis. Okay, and it's just better to have money in your RSA. It's way better than investing with all sorts of quote and unquote investment houses out there, because so many investment houses are not even regulated by anyone, even though they promise good returns. Maybe they deliver for a while. So there are many schemes out there that might lure your young people out there to come invest with them. But I tell you, the pensions industry is very well regulated. The people employed to manage these monies as portfolio managers are very tried and trusted professionals. It's a whole lot to even be CIO of any PFA. Okay, your experience, work experience, and capabilities has to be vetted and all of that. Okay, so I'm saying here, leaving money and in fact adding more to what your employer send on monthly basis to your RSA account is way to go. It's a very regulated industry where we believe safety first for investors' funds, and then adding returns to it, the best available in the market.
I completely agree. And let me just add this. When I do reviews for folks that want to do a financial plan, I tell them what you want to do with your PFA, right, is to get your PFA statement. And if you ask any financial planner, they can calculate for you using the rate of inflation, using your rate of expected income when you retire. They can tell you how much income you are expecting when you retire. Rule of thumb is this: when you retire, half of your salary is basically what you might get. So if you then do that, you can do a calculation and say, how much will I earn when I retire? And how much will my PFA and my other savings pay me? And you always either have a surplus or a deficit. I always tell people, make sure you are doing the additional voluntary contribution to shore up the 18%. You pay 8%, your employer pays 10%. You've got to make sure that you are doing that calculation and, if possible, making more payments, especially if you are older. As you're getting towards retirement, if you haven't saved, this is a very, very good way for you to put money aside. without worrying too much about taxes. If you put money in here, you are deferring those taxes, right? And like Damien said, the CIOs, the chief investment officers, are really, qualified to manage your assets, and it's a regulated vehicle. Daily reporting, pen come over your shoulder. You can't invest. They invest through a custodian. So really good, Dami. Aki, did you have a follow up?
But not necessarily a follow up, but I think some excellent points have been made. For us here, and my advice: voluntary contributions are key. A lot of people think that when they retire, that they will just their pension is enough. But sometimes, and in most cases, are not. You find out that it's not enough. You have to add to your pot. You have to add to the pot. But moving on the conversation a bit, we're still trying to get Bola Ibrahim on the call, and I'm sure she will join in shortly. But moving on the conversation in a bit, looking at the asset classes of what the pension funds invest in. Okay, as we've noted, most of the assets are invested in federal government securities, but I see that very little is invested in in alternatives, whether it is private equity or whether it is infrastructure, other asset classes that have real impact, have real impact on the economy or the real sector. In your opinion, Danny, why do you think that's the case? What will you say is the biggest singular issue that's preventing investment in that space?
I think what I've observed is the investment guideline that directs all that we do in terms of investment activity, asset allocation, and all of that. So investment guidelines is set out by PenOp, our regulator. So I think, maybe there could be some increases here and there in terms of limits set on private equity, venture capital, infrastructure fund, all of those things for the biggest of our funds now, Fund 2, as Carlo noted. The biggest of our funds, Fund 2, for instance, infrastructure fund, where you have all the real estate guys and all of that, agriculture, power projects and all of that. The limit set there is just 5% of our AUM. Okay. Whereas in Fund 2, you can do up to 55% of FGN, corporate bonds, and all of that. So just 5% on infrastructure fund. Private equity investment too is just 5%. Of course, I understand why those limits were set very low. Is to manage the many risks that could come with those kind of investing. But I've engaged with PE VC guys, and I keep telling them that you guys are sponsors of these issues or issuances. You need to find a way to convince regulator that you guys are on top of this game. So the contributors' monies are safe in these investments that you are bringing to the market. That will then help to relax those limits a bit, say to 10, 15%. That's when you start to see more investments going in that direction, really.
So if I could do a quick follow-up, right? I know, and just want to welcome Bola Ibrahim, the head of investments of Oak Pensions. Bola, how you doing? Bola, you want to unmute and say hello? Okay, Dami, just a quick one, just to follow up on that question, right? I know the PFAs a long time ago invested in the Lagos toll gate project. What do you think is the biggest hindrance now for infrastructure investments using pension funds? Is it that there's no paper in the market, i.e. pension fund, the venture capitalists, the infrastructure guys have not brought good investments for the PFAs to invest in, or that there's investments, but that the PFA rules prevent us from putting money into infrastructure? Because for me, like you said at the very top, if we have long-term liabilities, we can also invest in those infrastructure projects like the railways, the bridges, and waterworks, right? That will generate returns also for the contributors. So can you speak to that? Or if Bola also is able to unmute and speak, just to give us a sense of, is the problem that there's no projects for us to invest in, or that the projects exist, but they are not packaged for the PFAs that to then put money in?
The projects exist, okay, but I think it's easier to invest when it's state backed or there's some government guarantee coming with those projects. Okay, well, like I said earlier, I still feel that, I mean, even if the packaging and all of that, the transaction structure, the cash flows look good, the fact that in our guidelines, investment guidelines, right, we still have those very low limits set on things like infrastructure funds, private equity. I mean, there's that just continues to hold back how much you can do as a PFA, how much you can invest in all of those, really. So, like I said earlier, the onus is on maybe the consortium of the discounts of PE, VC people to engage the regulator and demystify the risks in what they do and all of these issues they bring to the market.
Okay.
I think the guidelines now are being reviewed, really. So I will be looking and hoping to see some change there that then allows PFAs, invest in those kind of issues.
Okay, I hear you. Bola I know Bola is able to unmute. I saw you unmuted a while back. Bola, hi. Bola, are you able to join the conversation?
Hello, can you hear me?
I can hear you very well. How are you doing?
My network.
No worries. We got you. How are you doing today?
Very well, thank you.
Great. Thanks for joining us. We're having a conversation around the view from the pension managers. We've just talked about investments and liabilities. All the funds are in bonds and all that. We're just talking about infrastructure funds, right? And I had asked Dami that what really is the problem? Let's take, for instance, the second Niger bridge, right? Would PFAs have been able to invest in that bridge? And why don't we have more of PFA funds going towards those kind of projects? It's told, but that means I said they need to have government guarantees. That project is told. Would PFA have invested in that bridge? And if yes, why didn't they invest in that bridge?
Okay, so thank you for the question. Like as it is in our guideline, we are allowed to invest in a minimum. We have a limit whereby we can invest our infrastructure fund. We cannot be exposed more than the limit that the regulator gives us. So specifically speaking to second Niger bridge, of course, it's a good infrastructure, and it's not that PFAs have not been investing in infrastructure. At least we've done infrastructure projects like Gel Utility, Africa Infra Plus, Stanbic IBTC Infrastructure Fund, Chapoyel, and all that. So I think, am I audible?
Yes.
Okay. So I think for PFA to be able to do specifically speaking to second Niger bridge, maybe would have a sort of guarantee, from all the likes of InfraCredit, Garansco, and all that. And if it comes to the market, if the pricing is right, if the awareness it's okay, why can't we invest in it? We can definitely invest in it, because projects that have positive direct impact in the economy is very attractive for PFAs, honestly. Those are the things that we are actually looking into making some more investment instead of us putting our funds in the federal government securities and all that. So, but I think the onus is on the regulators. Maybe there should be more awareness. They should increase the ban for the infrastructure fund, because if you see, especially PFAs, that their AUM is not really much. Maybe by now they would have even exhausted their limits. Do you understand what I'm saying? Yeah. So,
gotcha. So yeah. I mean, and just to dovetail, Akin has a question. Just to dovetail, I know the president just signed new constitutional amendments that says railways are now quote unquote off the exclusive list, which means that a state like Lagos, Rivers, Kogi, all those states near Abuja, they can now build railways, right? So if we have these pension funds and we have states that can then build, Lagos can build a railway to the border of Ogun, Ogun can take a railway to the border with Edo, Edo can build to the border of Imo. Does that excite you, Dami and Ibola? Does that law excite you? Does it excite like your partner? I did mention Chapel Hill. Are we going to see pension funds partnering with the infrastructure funds to support, development projects like this?
Yeah, I think PFAs will be so more than happy to invest in such projects. Like I said, all the projects that we feel it's going to be good for the economy, why not plow people's funds into this and ensure that at least we are getting the reward for it. But to do all of this, is the environment conducive enough for that? I don't think so. A case in point is the Lekki toll gate. Issues around government regulation, even insecurities. Look at what happened at the Kaduna railway line. Look at what happened. I mean, are we really right for this? For those that, if you want to plug, these are people's money we're talking about. These are people's sweat. These are people's retirement savings. You now plow all those kind of funds into railway, and eventually the insecurity has not been tackled. What do we want to say to people? So I think we need to look into that also, in as much as we want to invest in such infrastructure.
Interesting. Actually, you got the floor.
Yes, thank you for that, Bola. And I think what I gleaned from what you said is that the solution is multifaceted. But I was looking at some of our African countries, like Kenya and South Africa. What the pension funds were able to do was they set up something like a consortium. So each individual pension fund, PFA, said, we are going to dedicate this percentage of money to this consortium. Another PFA will put some money aside for this consortium, which is dedicated towards infrastructure. Now, do you think a model like that can work in Nigeria?
Yeah, am I the one to speak, or is that me? Because I think I'm the one speaking now.
Yes, Bola.
Okay.
Bola, carry on now. Carry on.
All right. I don't want to be too forward. Okay. Of course, it can work. I don't think there is nothing that cannot work in our country, but we have to be our regulators, the onus is still on them. If we want to follow that kind of model, they have to there should be awareness. There should be maybe capacity building, because I really don't think we've done something like that. And for us to start something like that, we really need to be prepared for it. It's not, I'm sure Kenya and the other country that you mentioned. What country did you mention now? Kenya,
Kenya and South Africa.
Okay, I say. So I don't think Rome was built in a day. They would have started this gradually, and of course start building on it. Those are the ideas that we think we should be pushing to our regulators, and I mean PenOp should be at the forefront to push this kind of things. So far, it's eventually going to help the economy as a whole. I don't think it's something we cannot do. Yeah.
That's exactly what I was going to say. The PenOp has to be in the center of this convention. You have to be the ones convening, and canvassing those kind of efforts. You get
exactly.
But what I feel first is since the investment guideline is currently undergoing review, if you can even start from pushing up limits on those things a bit, infrastructure fund, private equity, venture capital, those kind of things. If those things can come up a bit, then you find some more money going into real infrastructure development rather than all FGN instruments. Because as it is now, that old guidelines is very tilted and biased towards FGN instruments. Really.
Thank you.
Honestly, Dami, I think.
Sorry.
Okay.
No, continue.
Okay, so I say honestly, Dami, I think in the defense of the regulators, I'm not a regulator, but I think in their defense, the scheme, the pension scheme itself, when that guidelines came out, that was when they were starting, and the confidence is not even in the scheme at that time. It's just now that awareness is coming up and all that. It's a scheme that a lot of people, even if you mention pension, even as I speak now, if I talk to some people about pension, they still believe it's all those pensions that you go and queue and collect your money and you die that's the idea. That's people's belief. So I think by the time the awareness is, everybody is aware of this is a scheme, this is how it is, it's very transparent, we have the custodian in charge of the funds, this is the operators doing this is regulated. By the time all these things come together and it's well coordinated, I feel it will be now easier for them. So like you said, the investment guideline that we are trying to improve on, maybe we should, PenOp should push it a bit for us so that there will be some limits pushed also to the infrastructure private equity.
So there can be more investments going.
Exactly. Even real estate, because as it is, it's only real estate trust fund that we can actually invest in real estate through the trust scheme. So.
Okay. Thank you for that, Dami. Thank you for that, Bola. Moving on the conversation a bit, I know I look at my RSC account, and one of the biggest threats, or I feel the biggest threat to my RSC account is the fact that is the Naira. I think that's the main cause of the devaluation of every asset in Nigeria. Now, do you think accessing or being able to purchase assets offshore in another country, in another currency, is essential to at least the survival of the scheme as it is? I'll pose that question to you, Bola.
Okay. Having investment in dollar-denominated instrument, of course, is a no-brainer. It's something that can support your portfolio, especially with the issue of devaluation, like you said. And I don't know, maybe you are aware that some few PFAs, we have investment in dollar-denominated instruments like Euro bonds and all that. But the volatility in dollar-denominated investment is not encouraging. Akimbola, is not. The exchange rate risk, the short FX supply in Nigeria, all this can discourage investment in dollar-denominated instruments. The question is, how do we even source for these dollars? What exchange rates are we using for this? So the exchange rate risk is just something that we need to tackle first. Hopefully, when this new government comes in and is one of the policies that they are looking at, then by then it will be easier for us, to dwell into this kind of investment. The only way we get dollars to buy all these Euro bonds is all those distributions we receive from all those private equity investments.
Okay. Dami, I think you wanted to say something.
Yeah, that's exactly my concern. The second point that Bola made on, there's so much there's so much gray area around your conversion to dollars. At what exchange rate? You have multiple FX windows. If you check the investment guidelines, you see PenCom referring us to CBN foreign exchange guidelines. Then when you get to CBN foreign exchange guidelines, there's nowhere there. There's no place there that addresses conversion of pension funds. They haven't addressed PFAs there at all. So you don't even know what window you then get dollars from. So like Bola said, some PFAs that have dollar investments is as a result of their Naira investment in some PE fund that then pay them back distributions in dollars. So those dollars are just then put into Euro bonds. But I'm not sure any PFA is able to, take contributors' funds, take it to, I don't know where, is it parallel market or I&E window? You put it in queue for, what purpose will you be telling the bank that what purpose will you be stating there to the bank as your reason for queuing? So I don't think there's enough handshake between PenCom and CBN to even allow us get dollars for such investing. So as it is, most of our pension funds, all of those monies are put in Naira investments.
Yeah, I mean, and
if you can clear and clean up that gray area, it would be nice to have some support from dollar-denominated investments.
Yeah, I mean, just to follow up, I mean, even if within a swap, I mean, we've signed swaps with China, with yuan. I mean, if a PFA says I want to invest in an American market, I do it from here. Are we saying as an institution, the PFAs cannot request for to invest outside Nigeria if they change to dollars? Just to be clear, is that what we're saying?
Like I said earlier, the concern is at what rate would you be doing that, and on what window would you be buying FX, and then from who would be the seller of FX to you?
Okay, so just that's where we're worried about that process. Okay.
Exactly.
Okay, but just to follow up on the question again, right? We talked about forex investment. We also did pass a law in Nigeria allowing 25%. That was a guideline from PenCom, allowing 25% of PFA assets to be invested in real estate. So could you speak on that? How has that been received by your contributors? Has there been an uptake in contributors? Have you guys actually started this? Any stories around this for both Bola and Dami? Any stories around this 25% going to housing that you want to share with us?
Bola, you can go.
Sorry.
Hi.
I didn't get that.
Hi, Bola.
I just had 25%. Sorry.
25% of pension funds going into mortgage. How is it going?
Oh, okay. The mortgage. Yeah. It's well accepted. I think it's the awareness is still low, and but of course we've been talking to our clients, we've talked to our contributors that you can actually access 25% of your mortgage. Of course, there are some guidelines to that, not to just go there and take 25% and say you want to add to your mortgage balance. There are some steps or some checks that you need to tick and all that. But so far so good. The some are accepting it. We've not done any in our even the overall PFA. I think is not even more than. I don't think they've done more than 20 or so from the last time I checked. But with time, I feel it's something that is well that'll be well accepted. People will be glad to do that, because what's the essence of you having so much in your RSA account and you don't have a house? I mean, is it until you retire, when you are old and all that you will now start building house? So gotcha. I think it's a welcome idea, and it's people are really glad about it. So let's give it 1-2 years.
Give it some time, right?
Well.
I got you. And guys, I'm just looking at my DMs. I have a few questions for both Bola and Dami that some folks have asked. If you do want to speak, just do a request and I'll add you and you can ask them your question directly. But Dami, I have a question here for you. It's talking more about careers, right? And it's saying, let me see if I can understand what it's saying. So it says something about it's being predominantly male oriented. Are you witnessing any change within your teams? And what are you doing to concern? It's talking more about the composition of the managers and all that. So you are a good person, Bola, to speak on this. Is the PFA, is it top heavy in terms of the composition of the managers, the CIOs? Is it really representative of, say, the females, minorities? That's all good. Can you speak on that?
Thank you for the question. Okay, maybe if I have this question 2-3 years ago, I might say yes, but things are changing. Yeah, things are really changing. We have my gender that have been MDs of PFAs. Mm-hmm. Some former CIOs that are females, they are now ED of PFAs. Mm-hmm. I mean, even in my own team, specifically speaking to my team, I can even say we are gender biased. We are more skewed to female. Mm-hmm. We have more female more than the male counterparts in my team. Yeah. So I think what we need to do is to ensure that we just have the right person. It shouldn't be about the gender, whether you are male or female. Just have the right person, the requisite skills, experience that can do the job. Gotcha. I think that's what's about. And female, we are coming up now. What I think is hindering all this before is maybe there are no female at the top that can be like a role model to you, that can chat the way properly to you. So people are just, let me say a bit laid back, but I think things are really changing at the moment. And the concern of work-life balance, stuff like that. If I'm at the top, I need to balance the hours, I need to, but
gotcha.
Like I said, things are not, I want to believe in Dami's office too. They are not gender biased.
Okay, Dami, do you want to clarify that you guys also are not gender biased? You want to give a check mark on that?
Yeah, I have about half of my team. Half of my team are female.
Excellent.
Well done.
Excellent. Okay, guys. The second question
Bola, you are now the one being gender biased.
I got you.
Maybe you have one guy there. My own team is balanced.
All right, guys. And a quick one just to follow up.
That's what happens when these women get to the top, feeling sidelined for a long time. They will now populate their whole organization with women, trying to make up.
Gotcha. So just a quick one again, right? There's a question here about ESG. In the United States, right, there was a law passed both by the Congress and the Senate asking that PFAs, their own version of PFAs, investment managers, fund managers, should not consider ESG, that i.e. environmental, social, and governance factors when making investment decisions, i.e. to say, if you want to invest pension funds in the US, you can't ask about, say, equity or either investing in guns or oil. The President Biden, vetoed that regulation, that proposed regulation, right? So just asking both of you now, do you guys consider ESG when making investments in Nigeria? Or is this something that you think will become a factor when you are investing? Would you look at the companies you are buying, their ESG policy? Who are they hiring? Do they have minorities? Are they investing in crude oil? Are those factors for Nigerian PFAs? Dami, you can go first, then I'll get Bola to speak.
Okay, so honestly, I think that's not our own concern yet. It's a pretty upcoming scheme. It's a blossoming industry. You don't wanna add all of those impediments to it. So for us, I think we're just chasing returns. Chase returns wherever the returns come from. Well, of course, exception would be the Fund 6, which is Islamic Fund, which is where you then ensure that all your investments are in halal investments, ethical investments that have all of those ESG elements to it. Okay, so for us, we are just chasing returns. I think by chasing returns, hopefully the returns then lure in some more contributors, into the fold. And then we can then begin to talk of some high-level stuff like ESG and all of that.
Interesting. Well, what's your take? Do you agree with Dami about ESG? For now, we're looking at returns, and that might not be in our rearview mirror for now. What do you think? Seems a lot lost, Bola. So, guys, Bola, are you there? Akin, you've got the floor. If you want to.
Yeah, in a way.
Oh,
yes.
go ahead, Bola. Yes, excellent. Yeah.
Sorry?
Yeah, go ahead.
Okay, I said in a way is another scheme. It's not something that we would like to now have something so complicated in the scheme. We want it to be so simple and safety of the funds, which is paramount. That's the first.
Safety of the funds paramount. I hear that. I heard you say that. There were
some bonds that were raised, green bonds. We could see that PFAs really, really subscribe to this. Can be further buttressed in the overwhelming subscription in both the Access Bank and the FGN Green Bond offers that we had. I mean, PFAs subscribed into it. So I think maybe in the later future, there is need for PFAs to incorporate the ESG tenant in their investment policies. So I think it's a work in progress for us. The regulators should engage the operators, for better awareness, for better sensitization, because it's going to be helpful to us eventually, but not something that we should rush into at the moment. But let it be something that we are looking up to in the nearest future, something that we can incorporate into our investment policies.
Good point. Akin, did you have go ahead, sir?
Yes. So I have a question here. Some countries have some innovative ideas of how they run their retirement savings schemes. For instance, an RSA holder can request that some of his RSA balance is invested into a particular kind of instrument, or whether it's invested into something else. Where do you see the pension scheme? Where do you see the pension scheme in the next 5, 10, 15 years? Are there any innovative ideas that are coming into play that will impact contributors? So I'll do that question to Dami.
Dami, you're muted just in case Dami's muted. Bola, you can take that what Dami's.
Oh, okay. I was talking already.
There you go.
Yeah, I muted myself now. Okay, so in the next 10 years, thereabout, I can expect, even from year on forward, you can expect some more transparency from the PFAs. Transparency in terms of, letting you know what we do with your monies. I expect that the regulators too would relax a bit in terms of, limits on certain asset classes, and then that gives us latitude to chase some more returns available in some asset classes, like you said, infrastructure investing, real estate, and all of that. So I think the future is bright. There'll be more sign-ons. There'll be more entrants into the scheme. Okay, there'll be more entrants. I think so far so good. We've treated retirees very nicely. There hasn't been the case of people queuing up or getting delayed before they get their pension payments from, the PFAs. So with all of this trust being built already, you can expect, some more participation, across the sectors in the scheme. So I think the future looks bright for the industry. You can expect us to, expand our horizon for investment. Very soon I see PFAs investing in foreign currency denominated assets very efficiently done, not with all of these bottlenecks that we have with the FX. Especially immediately once that sector becomes deregulated and, once the market is allowed to just trade freely, we can expect that clearly some of these contributors' funds will go into foreign currency denominated assets that then helps us to protect those funds against devaluation and inflation too.
That will be very interesting if they will allow you to do that. That will be very, very interesting. We'll see. Bola, did you have a take up on that?
Okay, quick one. Well, Dami has said it all, riding on what he has said. The industry is still evolving, and the ideas whereby somebody would request for his or her RSC to be invested into specific instruments. For now, our industry is not right for it. The Gen Z would prefer the Bitcoin, the cryptos, and others. And I don't think we are, if they are allowed to tell us where they want their instrument, their investments to be specifically, those are the kind of things
that
they would be asking us to do for them. Do you understand? Okay, so the idea behind the multi-fund structure, I want to believe that it's to address some of those specific issues. Like Dami said, the Sharia compliant fund is specifically for such kind of investment. Like, okay, you don't want any ushuru or any form of interest, let my fund just go to the Sharia. So I think it's a work in progress. So as time goes on, like I said, the industry is evolving, we will get there. But at the moment, I don't think we're right for it.
Not yet. And again, guys, quick one for both of you. Someone is asking if you guys can just do a brief walkthrough on how we can access the 25% of our RSA balance for the mortgage. Just a brief walkthrough on how does this work? Are you going to give them cash? Are you paying to their mortgage? How does just a brief one, Bola, just run through how that works?
Okay, so we are not giving you cash, basically. What it is, you would have to have a mortgage account. You would have an account with your mortgage house. There are lots of mortgage lenders, which mortgage banks that are allowed. I think the list is on the PenOp website. So you have to have an account with them. You have to have an account with them. They would have inspected the building. They would have done all their own necessary due diligence. So your own is just to come to the PFA with all those documents so that you can access the 25. So the PFA will liaise with the mortgage lender. The PFA would not pay the person directly. They would pay the mortgage bank that 25% of your retirement savings.
Okay, so that's how it works.
Let me just bullet point it so that let me just bullet point it. So first of all, confirm first how much RSA savings you have, how much money is in your RSA account. Show it to a mortgage bank. Then, on that basis, they are then able to give you an amount of mortgage loan based on what 25% of your RSA account would cover. So once you then get an offer letter from them, that offer letter is what PFAs will just work with. They know you already have an offer from mortgage, so all we are giving you is 25% of your RSA money. They send it to the mortgage bank. Okay, but offer letter from mortgage bank, I think that's the key element there. So it must be that, okay, you finalized everything with the mortgage people based on your RSA balance and they are happy with it. Okay, so you then come with offer letter and we just proceed very quickly to pay them that 25%, and they lend you the 75% remaining that takes care of the property purchase.
Interesting. Yeah, thanks for that, guys. We're almost rounding up. I got Chike. I think Chike wants to speak. I want to add him real quick so he can ask his question. The DMs are in, but most of the DMs are asking the same question. So I'm just sort of summarizing and asking, what policy, Dami and Bola, and I hear you guys talk about foreign exchange, right? But what other specific policy do you think the government can enact that would really boost contributions? We're at 10 million. Most of these 10 million are mostly the formal working class, the public sector and the private sector. We have the informal, but we're still at 10 million. But let me get Chika in here. Chika or Haji in to ask his question, and we'll come back to Bola and Dami. Chika, what's on your mind? Go for it. Chika, you're mute. Bola, Dami and Bola, what specific policy, like one, would you want to see happen that you think would boost enrollment and also returns in the PFA space? But that's a question for you, Dami and Bola. So Dami, you can go first.
I think if you can bring on some tax incentive for every voluntary contribution or every contribution you make to your RSA, I think that might spur people to, if they get some tax credit for every contribution they make.
So you're saying, like, if I contribute money,
it should be easy for government to do, knowing that much of these contributions eventually end up in their FGN bonds. Even if we move from where we are, say 60 to 70%, even if we move from there, diversify into other things, at least some 50% will still go back to government coffers as borrowing through bonds and sukuk and all of that.
Gotcha. So you're saying if I contribute a naira, I get like a tax credit onto my that. It's not tax deferred, but I get a tax credit if I contribute. That's what you're saying, just to be clear.
Yeah. That would help.
Gotcha.
And also, in addition, I think
pensions. To help with the micro pensions.
Go ahead, Bola.
Bola.
Okay, sorry. I said in addition, maybe the FX policy also, that there needs to be a clear-cut FX policy that will unify the multiple exchange rates we have. Yeah. We're talking about dollar-denominated instruments before. So this can help us by the time we have a clear-cut FX policy. I think we need to check on even the policy around subsidy removal. I think that one too is paramount, because eventually, if the subsidy is removed, all the resources will be channeled to the key sectors of the economy. We're talking about infrastructure fund now, infrastructure bonds and all that. It will better the state of those sectors, attracts FDIs, and by extension, maybe boost the economy and so on.
Gotcha.
I think
completely agree, and it has to happen, right?
I think whatever policy helps the economy will translate in disposable income, and then it increases propensity or desire to make voluntary contributions, because there's just some more disposable income in people's pockets. So whatever policy helps the economy that way, it's good for pensions industry, really, like Bola said.
Gotcha. All right, guys, I think we've had a great 1 hour. I've learned a lot. Just touching base with you guys. I think we should do this again with PenOp and you folks. Akin, did you want to have your closing talk, and then we can sort of like start to wind down and thank the folks?
I just wanted to second the last. I just wanted to second what you said. I think I've learned a lot. Even though I know Bola and Dami very well, I've learned a lot, and I'm sure your listeners have learned a lot too. Pension, these are the professionals. They manage billions, if some of them trillions in assets, and these decisions that they make are things that affect everybody. So this is what you see on your pension balance. So it's nice to hear from them. It's nice to hear the reasoning behind decisions, some of the decisions that they make. And, I hope we can do this again in the future.
Yes, sure.
Gotcha, guys. All right, so thank you so much, guys. And hey, all the folks that are listening, I do appreciate you guys. We've been having a talk with the Chief Investment Officers of the Nigerian Pension Administrators, right, under the auspices of PenOp, the Pension Fund Operators Association. We were talking to them about investment climate, policies, even the funds and all that. And they've really given us lots of nuggets for us to go back with. So very, very grateful that we have, been able to enrich our understanding of all that. So thanks, guys. Thanks, Dami. Thanks, Bola. Thanks for joining in. Thanks to everyone that has indicated and has spoken or has sent a DM, so that I couldn't get into all of them. We did have a lot of questions to cover. Aki and PenOp, I can't thank you guys enough for doing this. So thanks, guys. You guys have a great weekend. Stay safe.
Thank you.
And do look after each other. You're very welcome, guys. All right, take care now, and bye.